Ray, I've been watching you on television, warning people about 2026, financial reset, heart attack, worse than a recession. You told NBC in April that we're at a decision-making point and very close to a recession. And you're worried about something worse than a recession if this isn't handled well. I respect your macro analysis, I really do. But I've heard doomsday predictions my entire career. And you know what? The best strategy has always been the same. Own great businesses at reasonable prices and hold them forever. When everyone else is panicking, that's when you buy more. I'm sitting on $347 billion in cash right now at Berkshire. Not because I'm scared, but because I'm patient. I'm waiting for the right opportunities. And when the market crashes, if it crashes, I'll be there buying with both hands. That's what I did in 2008. That's what I did in 2020 during COVID. And that's what I'll do next time.
Warren, with all respect, you're fighting the last war. 2008 was a financial crisis within a stable monetary system. 2020 was a pandemic shock with infinite monetary firepower to respond. 2026 will be different. This isn't just a recession. This is what I call a debt-induced heart attack that could strike within the next 3 years. I studied 500 years of history for my book Principles for Dealing with the Changing World Order. Every major empire goes through 7 predictable stages. America is deep into stage 6 right now, heading toward stage 7. Currency gains trust, nation grows, peace and productivity. Debt escalates, wealth gaps widen, bubble bursts, governments print excessively, society polarizes, external competitors emerge, then reset, currency collapse, political restructuring, new power rises. This isn't a normal downturn you can buy your way through. This is systemic breakdown.
Stage 6? Empire collapse? Ray, I've been investing for 75 years. I've lived through World War II, the Cold War, nuclear threats, stagflation in the 70s, Black Monday in '87, the dot-com crash, 9/11, 2008, COVID. Every single time, people said America was finished. Every single time, they were wrong. And you know what happened to the people who stayed invested in great American businesses? They got wealthy. If someone put $10,000 into the S&P 500 in 1950 and just held it, reinvest in dividends, it's worth over $20 million today. That's 2,000 times return. Meanwhile, the people who sold in fear, who listened to the doomsday prophets, they missed the greatest wealth creation period in human history. So forgive me if I don't panic when you say 2026 is different.
Warren, I'm not telling you to panic. I'm telling you to prepare. And the data supports my concern. America's national debt hit $37 trillion as of August 2025. That's 124% of GDP, levels not seen since World War II. But in World War II, we were the rising power with manufacturing dominance and no competitors. Today, we're the declining power with a rising challenger in China, hollowed-out manufacturing and political paralysis. The Congressional Budget Office projects debt to GDP will climb from 100% in 2025 to 156% by 2055. Interest payments on this debt now exceed defense spending. We're spending more to service past debt than to defend the nation. And the only way out is printing money, which devalues currency, which creates inflation, which widens wealth gaps, which leads to social unrest. That's the cycle, and it's accelerating.
Debt to GDP ratios, projections to 2055? Ray, governments have been running deficits for centuries. Britain had debt over 200% of GDP after the Napoleonic Wars. They grew their way out of it. America will do the same. Innovation drives growth. Growth reduces debt burdens. It's happened before, it'll happen again. And as for the dollar losing reserve status, I've heard that my entire life. It's still 60% of global reserves. Yes, it's down from 88% in the 90s, but it's still dominant because America is still the most innovative, dynamic economy on Earth. We have the deepest capital markets, the strongest rule of law, the best universities. People around the world want to invest here. That's not changing.
Warren, that drop from 88% to 60% isn't noise. That's a structural, irreversible shift. And it's accelerating. Since 2022, foreign demand for U.S. assets has been declining. Bridgewater's research shows foreign inflows into American stocks, bonds, and real estate dropping steadily. And Trump's tariffs are making it worse. In April, I warned on Meet the Press that tariffs are throwing rocks into the production system. Companies pass those costs to consumers. Inflation spikes. The Fed is trapped between fighting inflation and preventing recession. That's a no-win scenario. And when trust in the dollar finally breaks, when foreign central banks dump treasuries and flee to alternatives, it won't happen gradually. It'll be a cascading collapse. By the time it's obvious, it'll be too late to protect yourself.
Tariffs, inflation, Fed policy? Ray, I don't spend much time worrying about macro. I can't predict it. Nobody can consistently predict macro. What I can do is identify businesses with durable competitive advantages, strong management, and predictable cash flows. Coca-Cola will keep selling beverages. Burlington Northern will keep moving freight. Apple will keep selling iPhones. These businesses adapt to whatever economic environment exists. And if there's a recession in 2026, great. I'll use my $347 billion in cash to buy more of them at cheaper prices. That's the opportunity. Everyone else panics. I buy. That's how I made money in 2008. That's how I made money in 2020. And that's how I'll make money next time.
Warren, your strategy works in normal recessions, but we're not facing a normal recession. We're facing what I've called a financial heart attack on the Diary of a CEO podcast in September. Multiple organ failure, tariffs causing inflation, debt causing currency debasement, geopolitical conflict with China disrupting supply chains, AI displacing 40 million workers and creating massive social instability, internal political polarization putting democracy at risk. These aren't isolated problems, they're interconnected crises hitting simultaneously. The Conference Board's leading economic index declined 6 consecutive months through July. Real GDP growth projected at only 1.6% for 2025, slower than historical averages. And your $347 billion in cash, that's denominated in dollars. If the dollar loses 20 or 30% of its purchasing power, your cash cushion shrinks dramatically. You think you're patient and prudent, but you're actually taking massive currency risk.
Currency risk? Ray, even if the dollar declines gradually, great American businesses will still generate earnings and cash flow. Apple sells iPhones globally, not just in America. Coca-Cola operates in 200 countries. These are multinational companies that adapt to whatever currency regime exists. They'll get paid in yuan, euros, rupees, whatever, and they'll translate those earnings back to shareholders. So even in your doomsday scenario, owning these businesses is still the right move. And concentration in the best businesses beats diversification if you pick right. Charlie Munger used to say, diversification is protection against ignorance. If you know what you're doing, you don't need to own everything. You own the best.
Warren, those multinational companies you love face structural headwinds. Apple's iPhone sales in China declining as Huawei gains share. Coca-Cola facing sugar taxes, health trends against soda, and margin pressure from input costs. These aren't temporary issues, they're permanent shifts. And when global growth slows, when the Conference Board projects only 1.6% GDP growth, corporate earnings fall. When trade wars intensify, margins compress. When currencies destabilize, translation risks explode. That's why diversification matters. You can own some businesses, but you also need assets that perform when corporations struggle. Gold hit record highs in October, while many stocks lagged. Real assets, inflation-protected bonds, commodities, these provide balance. And balance is what protects wealth through full economic cycles, not just the good times. Gold, commodities, inflation-protected bonds? Ray, that sounds like fear dressed up in sophisticated language. The best protection is owning productive assets with pricing power. Businesses that can raise prices faster than costs. That's the real inflation hedge, not gold sitting in a vault. When inflation hit 14% in the 70s, I bought See's candies. I bought the Washington Post. I bought insurance companies. They all had pricing power. They raised prices and maintained margins, and they compounded beautifully. You don't need macro diversification if you own businesses with pricing power. And you don't need to predict recessions or currency collapses. You just need to identify great businesses and hold them forever.
Warren, that worked in the 70s when America had 40% of global GDP and no peer competitors. Today, we're 24% and falling. China is 18 trillion, closing the gap fast. And the American consumer you depend on? Tapped out. Real wages stagnant for decades. Household debt at record levels. Savings rates near zero. Most people are silent about these problems because they're afraid to speak up, as I noted in Fortune in September. There's a chilling effect on economic discourse. Nobody wants to face retaliation for saying the truth. But the truth is, when the next recession hits, consumer spending collapses. Your consumer brands see revenue and earnings fall. Stock prices follow. That's why you need diversification, not just across stocks, but across asset classes that perform in different environments. Growth, recession, inflation, deflation. My all-weather portfolio balances risk across all 4 economic seasons.
Ray, you're making investing sound complicated. It's not. It's simple. Find good businesses, pay fair prices, hold forever. Don't try to time markets or predict macro. And don't diversify into things you don't understand just because some model says you should. I don't own gold because I don't understand it. It produces nothing. I don't own most commodities for the same reason. I own businesses I can analyze and understand. And when I'm not finding opportunities at prices I like, I hold cash. That's it. Simple, boring, effective. And it's worked for 75 years.
Simple works for you because you've spent 75 years building expertise and a $347 billion cushion. Most people don't have that. They need a strategy that works across different regimes. And the all-weather approach does that systematically. Allocate based on economic seasons, balance risk, rebalance periodically. The results speak for themselves. Over 40 years, consistent returns with low volatility. It's not sexy, but it works. And in the environment we're entering, with what I called very, very dark times on Bloomberg in September, systematic risk management matters more than ever.
The winner of the technology war between US and China will determine the future. We're in a great power conflict that could turn kinetic. We have internal political divisions threatening democracy. We have debt at unsustainable levels. These aren't hypotheticals, they're current realities.
Very dark times, great power conflict, democracy at risk. Ray, markets have been climbing walls of worry for decades. And the people who stayed invested got wealthy. The people who sold in fear missed the gains. Let me give you a real example. In March 2009, at the absolute bottom of the financial crisis, I spent $5 billion buying preferred shares in Goldman Sachs and General Electric. Everyone thought I was insane. The world was ending. Banks were failing. Credit markets were frozen. And I was buying. You know what happened? Those investments made us billions. Goldman paid us $500 million a year in dividends. GE paid hundreds of millions. When markets recovered, we sold at enormous gains. That's what patience and opportunism look like. And that's what I'll do again in 2026 if markets crash.
Warren, I remember 2008 well. Bridgewater's all-weather portfolio lost maybe 15%, while stocks fell 57%. That preservation of capital meant we had more to deploy when opportunities appeared. And we participated in the recovery through our equity allocation, while our bonds and gold hedges protected downside. That's the power of diversification. You made a heroic concentrated bet in 2009, and it worked. But what if the government hadn't bailed out Goldman or GE? Your bet would have been catastrophic. My diversified approach protects against tail risks while still capturing upside. And here's what you're missing. The next crisis won't have a bailout. The government is already at 124% debt to GDP. They can't print trillions more without destroying dollar credibility. The backstop you're counting on won't exist.
The backstop will exist because America doesn't let the system fail. We've never defaulted, never let it completely collapse. There's always a solution. Maybe it's not pretty, maybe it creates moral hazard, but it works. And as long as that's true, owning American businesses is the safest bet you can make. I wrote an op-ed in the New York Times in 2008. Buy America, I am. Stocks were in free fall. Everyone was terrified. And I put billions to work. Those investments made Berkshire and our shareholders enormous returns. So yes, I'm patient, but I'm also opportunistic. And the next crisis will create opportunities. Count on it.
Warren, I remember 2008 well. Bridgewater's all-weather portfolio lost maybe 15%, while stocks fell 57%. That preservation of capital meant we had more to deploy when opportunities appeared. And we participated in the recovery through our equity allocation, while our bonds and gold hedges protected downside. That's the power of diversification. You made a heroic concentrated bet in 2009, and it worked. But what if the government hadn't bailed out Goldman or GE? Your bet would have been catastrophic. My diversified approach protects against tail risks while still capturing upside. And here's what you're missing. The next crisis won't have a bailout. The government is already at 124% debt to GDP. They can't print trillions more without destroying dollar credibility. The backstop you're counting on won't exist.
The backstop will exist because America doesn't let the system fail. We've never defaulted, never let it completely collapse. There's always a solution. Maybe it's not pretty, maybe it creates moral hazard, but it works. And as long as that's true, owning American businesses is the safest bet you can make. I wrote an op-ed in the New York Times in 2008. Buy America, I am. Stocks were in free fall. Everyone was terrified. And I put billions to work. Those investments made Berkshire and our shareholders enormous returns. So yes, I'm patient, but I'm also opportunistic. and the next crisis will create opportunities. Count on it.
Warren, I remember 2008 well. Bridgewater's all-weather portfolio lost maybe 15%, while stocks fell 57%. That preservation of capital meant we had more to deploy when opportunities appeared. And we participated in the recovery through our equity allocation, while our bonds and gold hedges protected downside. That's the power of diversification. You made a heroic concentrated bet in 2009, and it worked. But what if the government hadn't bailed out Goldman or GE? Your bet would have been catastrophic. My diversified approach protects against tail risks while still capturing upside. And here's what you're missing. The next crisis won't have a bailout. The government is already at 124% debt to GDP. They can't print trillions more without destroying dollar credibility. The backstop will exist because America doesn't let the system fail. We've never defaulted, never let it completely collapse. There's always a solution. Maybe it's not pretty, maybe it creates moral hazard, but it works. And as long as that's true, owning American businesses is the safest bet you can make. I wrote an op-ed in the New York Times in 2008. Buy American, I am. Stocks were in free fall. Everyone was terrified. And I put billions to work. Those investments made Berkshire and our shareholders enormous returns. So yes, I'm patient, but I'm also opportunistic. And the next crisis will create opportunities. Count on it.
Warren, the next crisis will be fundamentally different. It won't be a liquidity crisis you can solve with bailouts and money printing. It will be a solvency and credibility crisis. When the dollar's reserve status tips past a critical point, foreign central banks and investors will dump treasuries and dollar assets simultaneously. That flight will be self-reinforcing and rapid. And by the time you deploy your $347 billion, the purchasing power of those dollars may have fallen 30 or 40%. You're not accounting for that currency risk. That's why I recommend people hold 10 to 15% in gold and other hard assets now, before the crisis hits, not after.
10 to 15% gold, Ray? I'd rather own productive assets. Farmland producing crops, businesses serving customers, infrastructure generating cash flow. Those things have intrinsic value. Gold has speculative value based on fear. And I've learned over 75 years to be greedy when others are fearful and fearful when others are greedy. Right now, gold looks like greed to me at all-time highs. Stocks look like fear, with everyone worried about recession. So I'm happy to wait with cash and buy stocks when they get cheaper.
Warren, you call it greed. Central banks buying gold at record prices call it strategic repositioning. They're not emotional retail investors. They're sophisticated institutions preparing for a post-dollar monetary system. And retail investors who follow your advice to avoid gold will wake up one day and realize they had zero protection when the dollar lost half its purchasing power. I'm not trying to scare people. I'm trying to prepare them based on 500 years of historical patterns that repeat with shocking consistency.
And I'm trying to remind people that betting on America has worked for 249 years. Innovation, productivity, and human ingenuity overcome every challenge. That's been true throughout history, and it will continue to be true. So my final advice: own businesses you understand, run by people you trust, with durable competitive advantages. Hold them forever. Don't panic during crises. And if you see opportunities during crashes, buy aggressively. That's what I've done for 75 years. It's worked pretty well.
And my final advice? Don't bet your entire future on one scenario. Diversify across asset classes. Own stocks for growth, bonds for deflation, gold and commodities for inflation. Balance your risk across economic seasons. Because if I'm right about the debt-induced heart attack coming in the next 3 years, and you're all in on equities, you'll lose 50 to 70% of your wealth. But if you're diversified and Warren's right, you'll still capture most of the upside. Hedge your bets, protect your family. Don't let overconfidence in one view destroy what you've built.
Overconfidence? Ray, I call it conviction based on 75 years of evidence. America adapts, America wins, and American businesses create value through every crisis. That's not overconfidence, that's reality.
And I call it ignoring 500 years of empire transitions, where every dominant power thought it was exceptional until it wasn't. The British Empire thought the pound would last forever. It didn't. The dollar won't either. And the investors who see that pattern and prepare accordingly will preserve their wealth. Those who don't will be casualties of history.
History will decide, Ray. But I'm betting on American innovation and resilience, not on empire decline theories.
And I'm betting on historical patterns that have repeated for 5 centuries. We'll see which of us is proven right when 2026 arrives.
We will indeed. And when that time comes, one of us will be proven spectacularly right. And millions of investors will either thank us or blame us for the advice they followed. I'm confident it'll be thanks, because optimism about America has always been rewarded, and I don't see that changing now.
And I'm confident that those who diversified, who held gold, who protected against currency risk, they'll be the ones preserving wealth when the system resets. Because preparation, not optimism, is what survives empire transitions. That's the lesson of history. And history doesn't care about our beliefs. It just repeats its patterns.
Then let's make this concrete, Ray. In 5 years, we'll sit down again. If gold is at 10,000 and stocks have crashed, I'll admit I was wrong. If stocks have compounded nicely and gold has underperformed, you admit you were wrong. And either way, we'll both donate $10 million to charity. Because what really matters isn't who's right. It's helping people invest wisely and build wealth over generations.
Agreed, Warren. 5 years, 2030. And for everyone listening right now in December 2025, you have a choice to make. Follow Warren's concentrated bet on American businesses and accept currency risk. Or follow my diversified approach and protect against multiple scenarios. Both of us can't be fully right. One strategy will preserve more wealth than the other. Choose wisely, because the decisions you make in the next 6 months could determine your financial future for decades.
Choose optimism. Choose productive assets. Choose America. That's been the winning bet for 2 centuries, and it will be for the next 2.
Choose preparation. Choose diversification. Choose historical wisdom. Because the empires that ignored pattern recognition throughout history all face the same fate, and we're not exceptional enough to avoid it.
Time will tell, Ray. Time will tell.
Indeed it will, Warren. Indeed it will.